study,
and play come together on a Windows 11 PC.
And for a limited time, college students get
the best of both worlds.
Get the Unreal College Deal. Everything you need to study and play with select Windows 11 PCs. Eligible students get a year of Microsoft 365 Premium and a year of Xbox Game Pass Ultimate with a custom color Xbox wireless controller. Learn more at windows.com/student offer. While supplies last. Ends June 30th. Terms at aka.ms/collegepc.
Growing a successful business has never been easy. But whether you're navigating a complex industry or trying to reinvent one, our breadth of banking experts are here to collaborate on market-proven solutions. At KeyBank, we're built to grow with your changing needs because we're not just here for the business you are now, we're here for the business you'll become. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B.
Trading at Schwab is now powered by Ameritrade, bringing you an expanding library of education with even more ways to sharpen your trading skills. Access new online courses, insightful webcasts, articles, engaging videos, and more, all curated just for traders. Plus, guided learning paths with content designed to fit your unique interests. No sifting to find exactly what you need so you can spend your time learning to trade brilliantly. Learn more at schwab.com/trading.
When you need to build up your team to handle the growing chaos at work, use Indeed Sponsored Jobs. It gives your job post the boost it needs to be seen and helps reach people with the right skills, certifications, and more. Spend less time searching and more time actually interviewing candidates who check all your boxes. Listeners of this show will get a $75 sponsored job credit at Indeed.com/podcast. That's Indeed.com/podcast. Terms and conditions apply. Need a hiring hero? This is a job for Indeed Sponsored Jobs.
Your body isn't a problem to fix. It's a system to support. From PMS to pregnancy to menopause. Ollie's Women's Wellness line is built on real science for every stage. No guilt, no stigmas, just science-backed supplements that work with you, not against you. Choose science over shame. Find support at a retailer near you or on ollie.com. That's OLLY.com.
Before we begin, quick disclaimer. Nothing in this episode should be considered investment advice. Results discussed have not been independently vetted. Any claims made by the guests have not been verified. The content is for educational purposes only. Views expressed by the guests do not reflect those of the host or this show. If you're a physician earning a high income, you've probably heard the same advice over and over again. Max out your 401k, do a backdoor Roth, save more, spend less, maybe buy some real estate. And while all of that is good advice, at some point, many physicians hit a wall. They're earning more than they've ever imagined. They're saving aggressively. Their investment accounts are growing. Yet every year, their tax bill gets larger, and somehow financial freedom still feels farther away than expected. The problem isn't that they're doing the wrong things. The problem is that most high-income professionals are playing only one side of the game. They're focused on earning and saving income, but they're not thinking about how that income is structured. Here's the reality. The tax code doesn't treat all income equally. A W physician, a business owner, a real estate investor, and an entrepreneur can earn the same exact amount of money and have completely different opportunities available to them. And that's where today's guests come in. Spencer Carroll, he's a CPA with Gelt, the official sponsor of this show, a tax planning and strategy firm that's helping high-income professionals think differently about taxes. But what I found most interesting about this conversation wasn't the tax strategies themselves, it was the mindset behind them. We talk about why many of the tax hacks passed around physician Facebook groups don't hold up under scrutiny, why real estate professional status, reps, is often misunderstood, one exchange, why 1099 income can completely change your tax landscape, and why the ultimate goal isn't paying zero taxes, it's building options. Because financial independence isn't about finding a magical deduction. It's about creating enough flexibility in how you earn, invest, and plan that work becomes a choice rather than a requirement. If you've ever wondered whether you're leaving opportunities on the table or if you felt like you're working harder every year just to stay ahead, this conversation will help you think about taxes, wealth, and financial freedom from an entirely different perspective. So let's get into it. Hey guys, welcome to another episode of the Financial Freedom Podcast. Our guest today is Spencer Carroll, CPA from Gelt. an AI tax planning software platform. Gelt is an official sponsor for the show, and I'm happy to have him on and discuss the work. Spencer, welcome.
Chris, thanks for having me.
Briefly introduce yourself and we'll dive into the questions.
I'm Spencer Carroll. I'm a CPA and an account executive at Gelt. We are a tech startup focused on helping our clients with tax filing as well as their tax planning and strategy. Our goal is to be proactive and help our clients pay the least amount of income tax legally required of them in accordance with their goals.
You run a real estate business on the side while doing tax work full-time at Gelt. What's the financial independence movement, and what did building your own portfolio teach you about taxes that doing taxes for other people didn't?
A good question. It might sound funny, but entrepreneurship is why I decided to study accounting. I wanted to be an entrepreneur, and I figured understanding my business's performance and financials was important. One thing after another led me down the very traditional career path. I started at Ernst & Young in New York City. I was on the audit side, not the tax side. I decided to pivot into an account executive role, code for a salesperson, because sales has entrepreneurial tilt to it. As I've continued working for Gelt, which has been an amazing job and I enjoy working for the company, I've also wanted to scratch that itch on the side. I have real estate that I run on the side, and then I have my own side business separate from real estate that I also run on the side. I know most of the financial independence benefit of getting into other activities because of my background being a CPA. So even before I diversified my income streams, I knew what would happen. But it's solidified the idea that taxes, they're a game, and the ability to diversify how you make money gives you reality and how you want to play that game. It does come with some cons. Your taxes become more complex as you start to make more money and do more things besides just a full-time job. It can be time consuming and more costly to file, but getting into the other activities presents opportunities for you to impact your tax bill in ways that you wouldn't have had before if you just stayed as a W-2 employee. So that's been the benefit for me getting into real estate and other business activities, giving me the option to pull different levers with my tax situation.
We gather here tonight to bring women back to their rightful place.
The Testaments, a new Hulu original series from the executive producers of The Handmaid's Tale.
It's easier to accept a story than believe that the people around you are monsters.
The battle isn't over.
There comes a time when you have to take action, when you have to choose your own destiny.
Never quite as it seems. Watch the new Hulu original series, The Testaments, streaming on Hulu and Hulu on Disney Plus for bundle subscribers. Terms apply.
This episode is brought to you by Beneful. Dogs of the world, lend me your ears, snoots, and little toe beans. We've been sitting and staying for boring food for too long. It's time to demand high-quality ingredients, fresh from the pantry. Together with Beneful freshly prepared meals, we can start a mealtime revolution. Can I get a woof woof? Kick boring in the bowl with Beneful freshly prepared meals. Visit Purina.com/Beneful to shop now.
Gelt recently raised Series A, $13 million back in September. How is Gelt doing taxes differently that attracted the eyes of Wall Street and venture capital?
There's a couple different answers to that. I think what attracted Wall Street and venture capital is the tech side of things that we're exploring. So we have real life CPAs. I'm one of them as employees of the company, and all of our clients get paired with a dedicated CPA. So it's not just AI tech robots telling you what to do with your taxes. You have a real person. At the same time, Gelt has an engineering team. We have a product team. We've built our own tax platform, and we're trying to be on the cutting edge of technology to help our team, also help our clients take advantage of the tax code as it's legally provided for you. I think that's what gets people excited. We're doing things differently. We think that AI is making our already good CPAs better. We're not yet interested in replacing the CPA.
We have doctors and physicians listening to the podcast. If they were interested in finding out more about Gelt, what problems, questions, or pain points would they be experiencing that their normal CPA firm can't solve?
What makes that question interesting is usually when I'm talking to a prospective client, they don't know what they don't know. And taxes are complex if they're not an accounting and tax professional. It might be that you think you pay more in taxes than you should be, and everybody feels like that's the case. Doesn't mean that's correct. That could be one pain point that you're feeling. Probably more often, it's a symptom of other pain points that you're feeling, which would be your CPA is too busy for you. They're not responsive to your questions over email. They don't hop on live calls with you, whether that's over the phone, Zoom, or in person. And you're just talking to them during tax season. They're asking for your documents. You provide it to them. They fill it out on their computer, file it with the IRS, and that's the end of the relationship. Tax season is not the time of year to be doing your tax strategy and planning. You've missed out on everything that you could have done. If that's your relationship with your CPA, then it's time to look elsewhere. You may be paying the appropriate amount of tax, but if that's what you're experiencing, there's a chance that you might be overpaying.
Rep status, it comes up constantly. Half the information out there is wrong and IRS scrutiny is real. What do physicians need to do to actually understand rep status?
A lot in there. You're spot on with a lot of it. Real estate can be great in terms of ROI, but it does take a lot of work. And what makes the ROI attractive when compared to your own business or passive equity investing would be the potential for the tax benefits. Add that to your total ROI, then it probably is competitive or maybe even a little bit better. But these influencers, it's so easy to make a 30-second clip and say, oh, go buy this property and you're going to be able to write off $70,000 in losses, which saves you $30,000 on your taxes. That doesn't make anything that easy. It does involve a level of work out of you or your spouse that is much harder than you think it's going to be. Rep status, real estate professional status, is 750 hours, which is really a part-time job. If you take that divided by 50 weeks out of the year, it's 14 to 20 hours a week. Hard to do that alone with just one property. So you need multiple properties. The second part of the test is it has to be more time than any other income generating activity for you. So if you're a full-time W-2, 1099 locum physician, it's very likely that the IRS is just going to completely throw out a reps designation for you. So you could think about your spouse, but I like to even use myself as a self-deprecating example. I am a CPA. I work for Gelt, a strategic CPA firm focused on saving our clients money. I have 11 rental properties, and my wife stays home with our daughter. On paper, you'd think I'm the perfect opportunity for rep status, and I don't do it. I don't have my wife qualify for reps. The reason why? My wife would kill me if I asked her to handle text messages about leaking toilets and filling vacant units. So it sounds great on paper. It's much harder than real life. That doesn't mean it's impossible. Those are my thoughts on how the influencers might be selling a dream.
This is a question I ask every CPA because a lot of doctors, they say, oh, just get rep status, which raise a lot of red flags. So I wanted to expose that. A quick question. Are you paying more in taxes than you should? Most high-earning physicians overpay by tens of thousands because their CPA only looks backwards, not forward. Gelt is different. Dedicated CPAs powered by AI that work year-round, not just at filing time. Tax strategy and proactive planning for practice owners, investors, and physicians with complex financial lives. Built specifically for professionals who want to keep more of what they earn. To find out more, check out joingelt.com. That's joingelt.com. Links are in the show notes below. FI culture loves frugality and high savings, but there's a point where tax efficiency matters more than another savings rate percentage point. Where does a physician cross that line from saving more versus saving in taxes?
When we're talking about personal finance, it is personal and highly dependent on somebody's unique situation. It would be hard for me to answer very specifically. My general advice to a physician, focus on saving a lot, is start with your tax advantage savings first. Focus on maximizing that, your 401k, your HSA, if you have a high deductible health plan. Then backdoor Roth conversions, because they probably make too much money to do direct Roth contributions. Backdoor Roth or mega backdoor Roth if your employer's 401k plan or your self-employed plan allows for that. That's what I focus on first. Then after you've maxed those out, if you're able to save even more, consider tax drag on those savings. So your high yield savings accounts, you're going to get taxed on the interest, you're going to get taxed on dividends. Hold your investments for at least a year so you get long-term capital gains. That's what I would be thinking about if I was hyper-focused on saving a lot of money.
A lot of the audience have heard about backdoors, but what is a mega backdoor Roth?
A mega backdoor Roth is within your 401k plan. In a 401, a lot of people think the max is what they're allowed to contribute as an employee, which in 2026 is $24,500. You might get an employer match on top of that. Actually, the max that you can contribute to a 401k in 2026 is $72,000. So you're wondering, how in the world am I going to get to $72,000? That's when after-tax contributions come into play. It's exactly what it sounds like. After tax, meaning money that's already sitting in your bank account. You've already received it, already paid the income tax on it, and you're able to throw it into your 401k. Why would somebody do this? Probably the only reason would be to pursue the mega backdoor Roth, which is once you've got the money in as an after-tax contribution to your 401k plan. Not every plan allows this, but some plans will allow for the conversion, and then you can do the mega backdoor conversion into a Roth IRA. It's the exact same thing. It's just one is done in your individual retirement account, and then the other one is strictly within the 401k.
Another guest on my show, he was talking about how he helps extremely high net worth, the Deca and the centimillionaires. Talking about centimillionaires, they don't, like in mega backdoor Roth, it's not in their picture. For physicians with serious FI ambitions, where do these accounts fit in the bigger picture and where do they get over?
I wonder if the super wealthy people, like the one guest CPA that you had on was talking about, I wonder if that's because once people get to that level of wealth, they don't have as much active income anymore. A lot of their income is passive. Their money and their investments are making their money for them at such a return that they don't have to worry about having a job like I do, Chris. For the vast majority of your listeners, they still need to think about the 401 Roth IRA, stuff like that, because they have mostly active income. It is active income that you need to be able to contribute, or earned income, I guess I should say, but it is also considered active on your tax return. Earned income is what you receive to then contribute to these accounts. So it is important. If there's another account that could be useful for your listeners to know about, it would be a cash balance plan, which is a pension plan that people can set up through some of their employers might have it, or if you're a private practice 1099, you could set one up through your own business. You can stack it on top of the 401k, and it's a pension, but you can put a lot more money per year into these cash balance plans, but they are tricky and costly to maintain.
On the lines of physicians, they have a W-2 or it could be purely 1099. What changes in their tax life the moment that 1099 income shows up that surprise them?
It's usually a good surprise. I like to joke with clients that W-2 income is the worst way for you to make money from a creative tax point of view. Doesn't mean it's a bad thing. If you have a great high-paying W-2 job, awesome. But the levers that you're able to pull from a tax perspective are fewer. They're usually the obvious ones, and they're easy to max out if you're a high earner. But once you get into different activities like 1099, you're self-employed, then the tax code really starts to open up to you, and you have the ability to do things that you couldn't do before. I'm joining you on this podcast from my daughter's nursery, which doubles as my office. I work from home, but I work for Gelt as a W-2 employee. I don't have the ability to write off my home office. But if I was self-employed, a portion of my rent or mortgage every month could be written off against the income that I'm earning. I nerd out about this stuff because I'm a tax CPA nerd, but I find the tax code to be quite clever. You can tell that the government is incentivizing certain behaviors. They want you to do things that they think is good for the economy, good for the country. They want you to take risks, start new things, make more money. When you get into that stuff, you can start to think about what entity is appropriate for you. How should you structure your entities? How do you pay yourself? Could you pay your spouse or your children? How do you save for retirement? What expenses, like the home office, could you write off against your income, which you're not able to do when you're a W-2 employee?
The 1099 is the gateway to more tax advantages. What is the FI strategy or hack that gets passed around physician forums and Facebook groups that sounds smart but doesn't hold up, something that your ears perk up?
We talked about how easy people think reps can be. It's not that easy. That's one. Another hack that gives me pause would be alternative investments outside of real estate. You've maybe heard of oil and gas, solar, land conservation. It's not that those aren't legitimate, but they're usually invested in by the taxpayer for the sole purpose of tax savings opportunity, which, like we talked about earlier with real estate, we encourage clients to invest in real estate that they think is a good investment no matter what. You think it's going to cash flow for you. You think it's going to appreciate. The tax savings are the cherry on top. Alternative investments, the tax savings is the sundae. Those are very heavily scrutinized by the IRS. I've talked to many clients that are currently under audit for those investments, which is not fun. If they don't succeed in the audit, they're going to have to pay back taxes, penalties, interest. That's something that I take pause with. If it seems to be true, it probably is. If it provides significant tax savings without requiring much out of you, I'd be skeptical. The IRS doesn't provide an easy button tax strategies for people.
A lot of physicians, their real goal is options, not retirement. What's one shift in how they think about taxes that get them there faster?
I would approach it in two ways. First way isn't going to be super tax focused, and I'll weave in the tax focus at the end. What I tell clients when they're talking about their goals, personal finance, retirement, or work optional, my first piece of advice is to not think about the taxes. Think about the top few lines on your tax return, which is your income. Maximize your income. It's never a bad thing to make more money. If you can handle it, you have the time and the energy in the day, try to make as much as you can. Once you figure that out, then focus on taxes, because taxes are usually your biggest expense once you start making good money. But at that point, now it's time to start thinking about your tax strategy. You should be working with a CPA that's proactive and meets with you throughout the year. Focus on the game, winning the margin arbitrage. If you're hoping you're going to reduce your taxes to zero or very close to zero, that is very hard, if not impossible. I would focus on my effective tax rate, when I'm going to pay the taxes, and at what tax rate am I going to pay the taxes at. To help your listeners, if you're into real estate, when should you take the bonus depreciation and try to qualify for reps or the short-term rental loophole? Try to do that when you're in a high earning income year, maybe a year where you sell your practice and you're going to make a ton of money and you need losses to offset income. Once you sell real estate, you do have to pay depreciation recapture and capital gains unless you do a 1031 exchange, or if you pass away, your heirs get a stepped up basis. Thinking about where your tax bracket is going to fall is important, like Roth conversions, mega backdoor Roth conversion. Same thing. When you do a Roth conversion, it's a taxable event. So it's not that you're paying zero tax on the income that you make. It's just, am I going to pay this tax at the 24% tax bracket, or am I going to pay the tax at the 37% tax bracket? That's the game.
Entrepreneurs, physicians file in October versus April. You mentioned 1031. A lot of groups they'll just do a 1031. It's passed around. How can people connect with you and find out more about Gelt? And
thanks for giving me the opportunity to share. You can find us at joingelt.com. You can fill out an interest form there, and that would connect you to either my calendar or one of my teammates' calendars. If you wanted to meet with me directly, email me, Spencer@joingelt.com. I'd be happy to send you my calendar link, and we could have a conversation about their specific tax situation. Check us out on all of the different socials, LinkedIn. We have a podcast ourselves. I'm the host of the podcast, Chris. Check us out on YouTube. We put out a lot of content, blog posts, newsletters to provide advice to people who are interested.
Thanks so much, Spencer, coming on. Gelt is a sponsor for this show. Really enjoyed the conversation.
Yeah, me too, Chris. Thanks for having me.
Let's zoom out. If you're a physician, founder, or high-income professional, and you feel like you're working harder every year, but not structurally freer, you're not alone. The mistake isn't effort, it's architecture. This show exists to help you convert expertise into scalable leverage, faster and with fewer expensive missteps. Here's the diagnostic I mentioned before. If your income requires your constant presence, if your capital isn't compounding outside your profession, if your highest value talent is doing low value tasks, you don't have a growth problem, you have a leverage design problem. And if you want to fix it with clarity instead of guesswork, I offer a limited number of one-on-one leverage strategy sessions each month. We audit your income model, capital deployment, authority positioning, and structural bottlenecks, and design your highest return move. If you're serious about compressing years into months, the link to apply is below.
Meet the new iSIMS, the single talent acquisition platform that's fully future-ready. It works wherever and however you hire, with insights no one else offers. One solution that fits seamlessly into your existing tech stack, which is why IT and HR leaders trust it. With the best of enterprise-grade software and AI, iSIMS helps you identify and secure the right talent faster. iSIMS, powering exceptional hiring. Learn more at isims.com.